So welcome to Unit 4. What we're going to talk about throughout Unit 4 is we're going to start off with focusing on managing your footprint tool. We're then going to move on to some of the more intricate footprint chart settings before focusing on functionality. I think that's quite a strong focus point for this Unit 4. We're going to talk a lot about functionality before moving on then ultimately to the advanced footprint application. Now, before I actually move in and we begin this unit, I just want to make sure that you guys recognize the importance of a trading tool. Now, don't allow Unit 4 to almost distract you ultimately from the true purpose of a trading tool. Okay. Remember, the objective of a trading tool is to extract information from the marketplace in a meaningful manner so we can make decisions. Okay. So I'm going to show you a lot of different things you can do now, and you're probably going to get this real urge to go and try them, to suddenly add to your charts. Okay. What I don't want is I don't want to overcomplicate. I don't want to create noise for you ultimately with this unit. I just want to show you some of the more advanced things you can do with the footprint tool so that when you are developing your own strategies in time, if some of these functions can add value to those strategies, by all means utilize them. Okay. What you've got in front of you, these are my notes. So what I'm going to do is I'm just going to briefly scroll down on these notes for you guys so that you can have just a brief moment to see what we're going to talk about. You can take maybe some pictures of these notes, maybe even record these notes for future reference. But I will be effectively going through each one of these utilizing the footprint tool. Okay, so we're going to start off obviously with managing the tool, talk a little bit about setup and chart fonts, as well as chart colors, printing, the magnet tool, as well as rescaling certain studies and different chart options. We're then going to talk in the second section about footprint chart settings and tabs. We're then going to move on to the footprint functionality, what style to use, etc., etc. And then we're going to obviously finish Unit 3 with backtesting. Before the advanced footprint settings, where we talk about highlighting, conditional formatting, adding certain price alerts, and then obviously modifications you can make to the general footprint tool. Okay, so that's pretty much what we're going to talk about now. Let's get straight into it. Again, I'm going to go through each one of these step for step, so don't worry. Okay. Where to begin? So this is now, obviously we spoke in Unit 2 about setting up the basic elements of your footprint chart. So this is more or less what you should have in front of you now. Very, very basic, just a simple footprint chart. Maybe your colors are different to mine. That's fine. Okay. I'm going to show you how you can change all of that now in a minute. Okay. So if you want to make changes to the preferences of your overall system, you would obviously click on the top left here. That would be effectively your default setting. So you can see if we came into the chart preferences, we can start off here by looking at some of the defaults that it's currently set to. Okay, so just very briefly, obviously grid lines, that is something that annoys certain traders and it doesn't annoy other traders. For me, I quite like having some sort of grid lines, maybe a solid major and minor division. And if I apply, you'll see simply it's just creating some form of a scale on the chart. Okay, in terms of other things you can have a look at, what I would say is obviously just make sure that, in terms of the labels and values, make sure that if you want display boxes, as you can see in the top left and the bottom left corners, if you want those display boxes, you can see that we've got them, listed here under display value box. So you can untick them if you want and simply remove them. And again, a lot of this is just play around. It's more preference more than anything. So if you want it there, include it. If you don't. Okay. Remember, obviously, as you're making changes in terms of the setup here, this will be your default settings as you go through. Now, one of the last things to pay attention to is this button called continuation. It is quite important. Now, continuation is just simply, obviously, when futures contracts roll over, in other words, they move into the forward dated month, continuation will effectively continue showing you the price, and it'll automatically show you the market, or the month, that's trading the most volume. Okay, now, obviously you can see the system default is to have no continuation. In other words, what will happen is you will have your chart come the end of the month will stop showing data, or it won't roll itself automatically. So for me, I suggest you unclick the no continuation, and again I would suggest that you go and click the active rollover when trading activity and optionally equalize closes. In other words, what that's saying is that the contract will automatically roll. The software will automatically put you in the front month as soon as the volume in the front month is more than the volume in the current month. Okay, so for me, I recommend that. Obviously, there are other options you can utilize, but we're going to utilize active rollover in terms of when the volume moves. Okay, so that's what you want to look at in terms of the system. Now, the next play we're going to move on to, again, we're going to cut up to the setup, and we're going to talk a little bit about some of the chart fonts. Okay, this is now simply if you want to change the text, if you want to change the size of the text, make something bold, etc., etc. This is where you would do all that. If you don't like it and you make a few boo-boos and you want to go back, obviously you can always come in the bottom left and restore to the original default. Again, what I would say is don't spend a great deal of time playing with these things. Just find something that looks okay and save it and then move on. Now, one of the features that's really good about this tool is that when you do find a feature that you really like, okay, let's say for instance you've created all your charts, you've been utilizing it for a couple of months, and then you all of a sudden want to make a change to all of your charts or some of your charts. Okay, you can simply come in this bottom right here and you can apply it to this chart on this page, you can apply it to all your charts on this page, you can apply it to all your charts on all pages, and you can apply it to all new charts. So you can make changes relatively easy on all your charts, some of your pages, etc., etc. Okay, so don't worry if right now you don't get everything perfectly. At a later stage, you can come back and make changes across all of your charts in one go, as opposed to having to do them all individually. Okay. Let's go back to setup again. This time we're going to talk about some of the chart colors. Now, when you opened obviously your footprint chart, it might have looked really, really ugly. Okay, now what I'm going to say, the first thing to pay attention to is when you start looking at the colors, just remember the footprint tool is very much a contrast tool. In other words, it's a tool where we want to see contrast quite easily. Now, that's why I either utilize a black background or a white background, because I really want to see those contrasts as aggressively as possible. So for me, either white or black on the background, that's quite important. And then again, in terms of your scale text, your right and left text, that's all these things. So on your right side, you've got prices, you've got time at the bottom, and you've got all your grid lines. Those are pretty much these sort of three boxes here. You've obviously got your grid lines, which are white, and you've got a whole bunch of other things lower down that you can play with. What I suggest you do is go through each one of them, click on it, choose a color, push apply, and see what happens. Okay, that's simply the best way to determine what each one of those boxes do and familiarize yourself with what the changes can do. And again, obviously, if you only want to make a change to this chart, all your charts, some of your charts, you've got that functionality on the right side. Okay, so now we've got our colors. We've kind of got a good little look at what the chart looks like. One other feature within the setup which is really good is obviously this demo trading. Now, the demo trading, again, down the line, what I would say is ultimately what the demo trading is going to allow you to do is it's going to allow you to effectively trade alongside on your footprint. Okay, so you can see here you've obviously got a bid and an offer, and these are the live prices, as you can see here on the bottom right. These are the live prices of the current WTI oil price. So, whilst the strategy is in play, you can effectively trade alongside it simply at the click of a button. Now, what I will say, most important, guys, do not be distracted by this tool. Okay, this is something that you only really want to start paying attention to as you move on towards the strategy section. What I would advise is completely eliminate this functionality until you start unit 6 to 15. And just make sure that you're not, when you're going through obviously the coursework and you're doing your practice sessions and your drill sessions, rather just don't have this here, because what it's going to do is, one, it's going to distract you. Okay, you're going to feel the urge to suddenly apply a strategy that you might not necessarily completely understand yet. But two, what it might do is it might just draw upon your old ways of thinking. You might just look at a chart and there might be some support, and you might be like, well, let me just buy it, to trial it. It's just a play around. Okay, so important. This trial with the free simulator, effectively you want to utilize that in a manner where you can practice the strategies that you're learning. Okay, so if you remember in the 30-day challenge, as I explained in Unit 1, and hopefully you've printed off, on your practice days, after every unit where we discuss and develop a new strategy, the very next day is a practice session. In those sessions, when you've done the drill work, you've found a couple of examples, by all means, feel free to have a footprint up just like we've got here, and feel free to simply buy and sell accordingly. Okay, that's how I would advise you use the demo trading. Obviously, if you want to get rid of it or minimize it, this little box in the top left here, just simply click on it. Or if you look on the left side of your footprint, you can simply click on the snap trader back and forward, and ultimately that'll just keep bringing it in. Okay, now let's move on just to one or two of the other things, or some of the other important things upon your toolbar on the left side. Obviously, print functionality, that speaks for itself. Now, a lot of traders on the Axia floor do still print their charts, to look at them, to annotate them, to draw on them, to really sort of spend time just focused on the numbers and not being distracted by other things. However, obviously, if you're someone that's a little bit paper conscious and you prefer to not waste paper, you can simply get a snipping tool. Okay, now if you go to your start on your computer and you type in snipping tool, you'll find that most computers nowadays have some form of a snipping tool, and you can simply just go new, and you can simply just select the region you want, draw all over it, make a nice tick, talk about certain imbalances, etc., etc. Right click, copy the picture and paste it into either a Word document or, as you'll see, a Evernote document as I'm utilizing. Okay, then in terms of the next tool, this is called a magnet tool. Now, the magnet tool is something that works particularly well, not so much in the footprint, but what it does effectively is a lot of the time when we select a line, for instance, as I've done here, we might not get close enough to the price we're looking at, maybe to a previous high or a previous low, or maybe a trend line. So what the magnet does is it effectively it attaches itself. So if I'm hovering maybe at the 05s, it'll attach itself straight down to the 04s. Okay, as soon as you click on it, you can set the level of magnetism within the tool, and you can see it asks for magnet strength. It's advised that you set it at least 50. This makes it relatively sensitive, and will at least find the price that it's looking for. Now remember, this is not an ideal tool for the footprint. It's better suited to the candlestick charts, so we won't really be utilizing it much in the footprint tool. Now, something that really came of interest to me, and I'm going to share this with you, and I'm going to bring back the Evernote, is that, okay, for me, I'd never known what the magnet button did. Right, now, this is the wonderful thing about this charting package, is that it's got an incredibly useful amount of assistance. Okay, so as you can see, I've got a nice little picture here, and all I did to go and understand what this tool did, and again, I might not explain everything very well to you, but in that case, you've got a wonderful info tool. So if you want to get more information about something, you can simply come up to the you can simply come up to the support in the top right here. You can go and open the help, and you'll see a nice toolbar like this will pop up. And as soon as you get this up, you can just go and type in the search function here and type in magnet. Okay, and once you have magnet up, you'll see it'll bring up some pointer tools or some chart toolbar. And there it'll explain it to you, okay? And that's really crucial because, there are going to be times, maybe not in this course, but later on, that there's certain things you want to understand better, understand the functionality, and you can simply use that very easy help function. Now, as I will explain to you at the end again, there are two other options for you in terms of support. If you're still not sure, you can then obviously go and talk to the You can obviously go and talk to the live chat. Those are the people on the support of CQG Market Delta, and they will assist you in terms of any kind of questions. But also what's very, very useful is you'll see a lot of the charting package. Whenever you hover over something, you'll see, for instance, if we hover over the magnet, all sorts of information will come up as we're hovering over it. The same will be as you go through various tools. When you hover over it, it will give a nice brief explanation of effectively what the tool's doing. So there you can see we hovered over profile. It says change pointer tool to profile area, and this will be the same for all these sorts of bars on the left. Add a study, it says. In terms of magnets, it says to us turn on the magnet. Okay, now what we're going to move on to is then some of the other tools that you can find here. Obviously the first 5 here, don't worry too much. This is just simply if you want to change this chart to either a bar chart, a candlestick, a footprint, a line chart, a Renko, whatever it might be. This is where you'll change the toolbar to any of these other tools. And then you've obviously also got some of the basic studies, whether it's the fib retracement, a profile, all these sorts of things along the left side. Now, don't worry too much about this. Again, that's just for ease of use. If you want to switch to a bar chart, simply click on it. If you want to switch, you can go to a bar chart very quickly. We can come back to the footprint. We can do all sorts of things. We can move. We can go and add maybe a volume weighted average price. And it'll very quickly add the study onto the footprint. Okay, now just in terms of some of the other buttons here, we can see a rescaling tool. So what this is going to do is a lot of the time, you might have a lot of information or you might have a relatively small screen. So all that's going to do effectively, if you have a lot of information and it cannot fit within your page, the moment you go and rescale, it's just going to rescale the picture so that it all fits onto your one page. Okay, so that's pretty much the toolbar on the left explained. Again, it's more just preference, okay? It's about making sure everything is as you like it. Now, I suggest spend a little bit of time with this, particularly the preferences, particularly the colors and the fonts. When you found something you like, then move on to the next section. Okay, and the reason you want to do that obviously is you don't want to keep coming backwards and forwards making changes. Get all your changes done very early on so that you can then move on to focusing on the actual footprint and developing the strategies. Okay, now the most important thing, when you are happy with everything, you've got the save button here on the top of your toolbar. What we did set up obviously in Unit 2 was the autosave function. So again, make sure you set up the autosave function. If you didn't, just make sure you're always saving the current page so that if you do exit or something goes wrong, you're not going to lose all the work you've done. Okay, that's the end of the first part of this Unit 4. Let's now move a little bit into some of the more interesting stuff and actually talk a little bit about some of the footprint chart settings. So I'm just going to bring this up again. What we're going to talk about now is we're going to talk about color lines. Again, this is particularly important, and I'm going to show you the different colors for certain things so that when we move on to the strategies, you will understand why I have certain different color lines. We'll also talk about organization in terms of your tabs. Okay, so let's start off with, in fact, I'm going to start off with the tabs and I'll come back to the color lines. The first thing is organization is key. Okay, remember, if you're trading multiple markets or you have a number of things you're focusing on and a number of strategies, you have to be very, very organized, okay, because you're taking in a lot of information and you need to be able to make effective decisions on that information. Right, so if things aren't organized and aren't where you expect them to see and it's quite messy, again, your decision making is going to be messy and ultimately it's just going to create anxiety and you're going to lose money as a result. Alright, so the first thing is if we, let's say we've now found our bar and we're really happy with it, our colors and everything's good, we can then simply go and duplicate the chart you see in front of us by clicking on the plus. Okay, so these two are effectively the exact same chart. Now what we can go and do is we can just go and rename this, maybe call it oil and we call it rotation and push enter. We can do the same for the first one, maybe we call this oil time, for T for time, and we push enter, and then we can go click another one and we can name this oil and we can call this imbalance. Okay, and I'll go through all this in a bit of time when we start talking about the individual functionality. All right, now I would do the same thing for every other market. Okay, Some people might have separate pages or one whole page. Obviously what you're seeing in front of you is one whole page. So some traders might have one page where the footprint fills the entire page, and some traders might do something like this, where they have maybe 3 of these across the way. Okay, if you wanted to create 3, you'd simply come into the top left, you can replicate and drag, and we can replicate and drag and effectively have 3 different footprints all in one view. Okay, so obviously now, again, you can only see so much information, so again, it's all at your discretion, but that option is available for you. Okay, for me, I'm going to keep it nice and simple. I'm going to keep all of our markets, for instance, in one long tab. And again, the reason I prefer it this way is because I feel if you have, again, if we go back, if we had, say, 3 of these, you can see very quickly how you can be drawn into too much information. Right? If this was, say, 3 different markets, obviously you can observe 3 different strategies at the same time, but you're being drawn into a lot of information. So it's all about, the risk reward. More information potentially means, less effective execution. Okay. So let's close that down and let's move on to the next bit of functionality. Now, what I will say, guys, make sure the more footprint charts you add, the more work you're going to have to do. What I mean by that, well, every day you're obviously going to be putting all sorts of lines on your chart. You're going to be looking at certain studies, informational boxes, as I'll show you in a minute. And the more you do on your charts, just remember the more fixing and cleaning up and tidying you have to do. So again, factor that in. At the end of every day, you've got to get rid of lines that are no longer relevant, maybe get rid of info boxes that are no longer relevant. Just keep it neat and tidy, all right? The more tidy you keep it, the better prepared and better execution you're going to have as a result. Okay, now let's talk a little about colors, because this is particularly important. You'll see when we start talking about the functionality with a footprint in terms of conditional formatting and that, this is what you want to do. You want to keep things in such a manner that you can just simply focus on making decisions. Right? The time you're spending on this course and setting up your footprint, you want to spend a lot of time doing that, so that when you get to trading the market, you're simply just making decisions. Okay, you're not spending time fixing your footprint or cleaning it up. You're just making decisions based on the information coming through the tool. Okay, so the color lines. Very briefly, I'm going to bring this back. In fact, I'm going to take a snip of it and I'm going to move it to the top left corner, and then you can obviously see it quite nicely. So just take a brief picture of this. This is effective throughout the course. These are the colors I'm going to utilize. Now, I'm going to go through them and I'm going to plot them on the chart for you and show you how to change them. So I effectively have 7 different colors. Now, again, you don't have to adopt these color scheme. You can adopt your own color scheme. You might not even like the idea or the principle behind the color scheme. But the reason I have it's very simple. Every one of these colors is identifying something for me so that I can effectively execute one of the 10 strategies you're going to learn. Now, for me, brown colors represent daily highs and lows. Okay, so whenever there's a daily high and low, in my debrief the previous day, I go and put those brown lines in to show me the daily high and low. Now, obviously that's very effective for breakout trading or for, extensions on previous day's highs, or maybe potential imbalance strategies. In terms of pink, right, you'll see a bright pink simply indicates the weekly high and low. In terms of red, these are just very important reference points. So any kind of points of reference that I thought were valid from the previous day. Let's say, for instance, we had a key economic data piece, European CPI. I would always put a reference point at the starting price of the CPI and maybe even the high and low that was left as a result of that economic data. Okay. Again, the reason I do this is just that it's a reference point. It's drawing my attention to this having been quite an important reference on economic data. Then orange, I utilize for high absorption. Again, I've spoken a little bit about this in Unit 3, what absorption is, what it looks like, and you'll see me talk about this extensively throughout the strategy sessions. So for me, I use orange to signal where there's been some really high absorption or really, really big delta shifts in price. Okay, in terms of dark blue, this would signal really key breakout areas. Now, when we talk about the breakout strategy right towards the end of the course, obviously this, breakouts, we tend to use a couple of different charts, not just a footprint. So for me, identifying the breakouts, I always like to put a nice dark blue line. So that signals number 1. I don't want to go against the break of that blue line, But equally, I want to make sure that when that break occurs, I'm watching that price action around the blue line quite closely. Right? Turquoise shows us where there's initiative, so it shows us where someone has stepped in, either a buyer or seller, and they're stepping in an aggressive manner. Okay, and then obviously green shows me any kind of imbalances in the market. Again, I briefly introduced the imbalances to you in Unit 3. When we get to the actual strategy session on imbalances, you're going to understand this very well and how it effectively works. Okay, so let's go and apply these now. Let's go and show you how to apply these lines very simply. Let's say this was the high of the previous day in terms of 58.60. In fact, what I'm going to do is I'm going to show you how to apply lines quite quickly. So if we quickly go on to a time-based session here, if I went to modify and I simply went to the source, I can see it's on bar, which means I can make it time-based. Now, if you want to quickly put in weekly high-low, daily high-low, maybe some initiative points, etc., you can simply come and right-click on here, change the interval to a daily or a weekly. So we can see currently we've got the set to a daily. So very simply, I can go put a line there and a line at the top, and I can see now the low of oil yesterday was 57.44 and the high was 58.12. Now in terms of weekly, I can do the same thing. I can right click, chart interval, and go weekly. Okay, obviously at the moment this footprint is only available on intraday or daily, so we're going to go back to the daily, and if we get the weekly out here, you can see obviously the day now is Thursday, so it's Thursday, Wednesday, Tuesday, Monday. This was obviously last week's low, and this was last week's high. So again, we can go and right click on the line now. We can go and set the horizontal color and make it nice and pink. Okay, and we can do the same for the pink. Alright, so straight away, you've got the daily high and low, you've got the weekly high and low. Now, let's say, for instance, this was an important reference point. Maybe that's the point that the WTI oil inventory data came out, and we can simply leave that red line there. Okay, we can then go and put an orange line. So let's go find, we saw, obviously yesterday, we absorbed 20,000 or almost 40,000 contracts at price point 71. So we can go and make a nice orange color. Okay. And then we can go and obviously put a dark blue. So obviously this 58.60 is a very important level. We can see it's been a really big turning point in the market, and we had some big rejection. So this might be some really important reference point or a breakout point. So we go and make a nice dark blue color, and we put it right next to the pink line. So we can see a really important area developing there. We can then go look for some initiative. So we can see the market really initiated off this high as well. We can see some real low volume areas here, and we can sort of go and look and say, well, maybe price point 41, that's where it initiated from. That's where the sellers stepped in an aggressive manner. And then last, we go and highlight some of the imbalances. Again, we need to find those imbalances. What I'd say, maybe let's say, for instance, this little area over here, we can go highlight that and say, well, here's an effective imbalance left in the market, which at some point we know by definition should fill out. Okay, now I know I've kept this footprint on a daily chart, and I've done this in a very primitive manner, but the important thing to understand is the importance of color lines, okay? Because as the market's now moving around and there's a lot of information, a lot of things going on at the same time, I don't have to think a great deal, okay? Let's say the oil starts to approach this area, bang, I'm switched on, I know there's a weekly high as well as a key breakout area, I simply apply breakout strategy rules. Okay, let's say we come back down to the 71, bang, I know what the absorption and auctioning strategy is, I simply wait for it and execute when we retest it. Right? I know that the market tends to fill out these imbalances, so when we get to this imbalance, we trade the imbalance strategy. And that's all it is, guys. It's putting these lines as markers so that you can quickly make effective decisions. Okay, that's the color lines then, and that's the end of now the part 2 of Unit 4. Let's now move on to some of the footprint functionality. Okay, now what I want to talk about here is, why and how to use different time frame rotations, how to choose rotations, some time-based or how to know whether you use time-based or not, what styles to use, and etc., etc. So I'm going to go through this one by one with you on the chart now, and hopefully you'll get a better idea. So the first question is why and how to use different time frame rotations. Okay, so what do we mean by that? Well, in Unit 2, I discussed with you that when we go and we modify the footprint, we've obviously got in terms of the source, we can choose between a number of different source types. Now, note throughout this course, I'm only ever going to use two types. One is a bar, one is a point and figure. Not because the others aren't potentially good options, but because this is where I've developed experience and skill over time. I feel I can organize the information in a really good way just utilizing these two. Now, bear in mind, guys, you can go through the different options here. What I would say is, though, the minute you start to go through these options, just make sure that the option you select is adding value to your decision making. Okay. So the first two obviously is why and how to use the different time frame rotation. So the first obviously we spoke about, we had a bar, which is a time based, whereas a point and figure is a rotation based. In other words, the market will only create a rotation once it meets a certain criteria. Okay, so now once you've chosen your source type, then we need to look at obviously the types of styles. Now, within the point and figure and the bar, you can select any one of these 5 styles. Now, again, throughout this course, I'm only going to spend time talking, bid and ask as well as the imbalance. And the reason I explained to you in Unit 2 was very simple. Things like volume and delta, you can get that same information utilizing both these styles of bid and ask and imbalance. Right? As for the profile, again, I don't need that style here. Why? Because I have both a profile tool added, which I'll show you how to do in a minute, as well as obviously I have a tool added, but also you don't need this in terms of making decisions based on the footprint. Okay, so that's where we're going to start now. Just again, I've made a note here. Just remember, guys, a tool is there to extract information based on the strategy you wish to execute. Okay, so what that means is that, like I said to you with these color lines, all right, we've identified a potential breakout strategy around the 58.61. Okay, so what you want to utilize the tool is you want to develop an understanding of what the price action or what the interaction looks like around that breakpoint and once it breaks out. Right, so the tool is just there to give you information about the strategy you're trying to execute, which is a breakout. Right, so the strategy always comes first, and then the utilization of the tool and the information from the tool sort of almost acts as a backup. It's almost like a confidence that, actually I expect to only see buys at this breakout. The footprint tool is showing me those buys, therefore the trade is very, very valid and I can confidently execute. Okay, now, the next thing to talk about is, once you've obviously, in terms of, you've got the two options under the source, we can choose the time-based bar source type, or we can choose the point and figure type. Now, the question a lot of you are asking yourself is, what sort of time should I use as a function, or what sort of, rotation should I use? Now, the first thing I'm going to say to you is, it depends. Okay, that's the most crucial thing. So if you are a long-term trader, a swing trader, right, you want to set your footprints to potentially longer time based rotations, maybe daily, maybe 60-minute, maybe 30-minute. Okay, so it all depends on what sort of information you're trying to extract. Now, what I will say, you'll see me utilize throughout the strategy sessions predominantly shorter term time frames, maybe the 5 minute, maybe the 1 minute, okay? And I'll explain to you why. A lot of the strategies we're going to utilize are more focused on, momentum or, risk event trading. And for that reason, I need shorter term information. I need to see interaction between buyers and sellers on a shorter time frame so that I can make decisions on the strategies I'm trying to execute. Okay, so what do I mean by that? Well, it's simple. If I go and, for instance, if I want to trade a breakout of a previous day high, or maybe a previous swing high, right? The interaction is going to occur very quickly and very aggressively around this 58.61. So for me to use a daily footprint might not be as effective as, say, using a 5-minute footprint. Okay, so why? Well, because obviously on a 5-minute footprint, I can really zone in to specific areas and see how the buyers and sellers are interacting just before and just after that breakout. Okay, so that's the first thing to understand. Apply the time based on the strategy you're trying to execute, all right? If they're momentum strategies or fast money strategies, then you do want to be utilizing maybe shorter time-based footprint rotations. If, however, maybe more swing-based, maybe you're holding on to a trade for an entire day or a couple of days, then by all means make sure you're utilizing 30-minute, 60-minute, and daily time frames. Okay, so in terms of the rotations then, okay, so that's the time-based. Now in terms of rotations, how to select the best rotations, this all depends on the market you're trading. And again, I'm just going to take a snapshot here for you so that you can see effectively some of the options available to you. What I would say, guys, so important, is there's no right or wrong here. It's all about preference. Okay, so the way I utilize or the way I set rotations is very simple. And again, like I've said, don't complicate and keep changing. Once you've selected a rotation, stick to it. Okay, there is no right and wrong here. That's the key. This is just about, what is maybe a slightly better option. No right or wrong though. Okay, but once you have found something, just stick to it. So if you're trading bond markets, what I would suggest is find out what the basis point per rotation is. Very simply, there won't be too many of you trading, for instance, German bunds, but currently German bunds are roughly around 14 prices per 1 basis point. So for me, what I'll tend to do on German bunds is I will look at half a basis point moves and I'll utilize a rotation of 7 prices. Okay. In terms of the equity indices, I like to think in terms of percentages. All right. So for me, I like to look at 0.1% increments. So in the SPOOs, this might be 12 ticks. In the DAX, this might be 15 ticks. Whatever it might be, go work out what a 0.1 percentage move is in the end equity index and apply this to your rotation. In terms of the FX, I like to use 10 pips. Okay, that's for all FX markets. In terms of the commodities, I like to use a 10 tick as well, simply because a 10 tick move in gold or 10 tick move in oil or nat gas, whatever it might be, is equivalent to $1. And then I've noted here in thinner markets. Okay, so when you have a market that's really thin, i.e. maybe the DAX, the nat gas, the Bitcoin, you want to choose the rotation that can ultimately extract information in a meaningful manner. Okay, the problem is with these thinner markets is because there's a lot of spread maybe between the best bid and the best offer, or there's a lot of untraded prices. Just having maybe a 5-minute maybe having a 10 tick or a 20 tick rotation, it won't show you any meaningful information. If anything, you're probably not going to see enough. Okay, so in those instances, again, maybe you want to use, say, a 20 tick rotation in the DAX, or maybe in the Bitcoin, maybe a $50 rotation, just so that you can pick up on the information being shown. Okay, now let's quickly go and apply some of this to the tool. So what we've got obviously is an oil. Now if you want to apply a rotation, a 10 tick rotation to the oil, we're simply going to right click on the tool, modify the footprint, check that our source is point and figure, which it is. Now once we've got that point and figure as our source type, you simply want to click and choose on the reversal. That's ultimately your rotation. Okay, so note, we said for oil we want to use 10 ticks simply because it's equivalent to $1, and we then just going to simply go and push OK. Okay, and you'll see now what will happen is the oil will only create a new rotation once it goes 10 ticks in the opposite direction. Okay, so we can see obviously this morning, based on this current rotation, we've had quite a long rotation. Right, this rotation started, as you see if you hover over, this rotation started at 10 o'clock this morning, and it's now simply been going on for almost a good 48 minutes. Okay, now where rotations are very, very effective, and again we'll talk a lot about this in strategies in units 6 to 15, but the rotations are very good for flows, or when there's a general auction in the markets are trending in what direction. That's when I would tend to focus a little bit more on rotations. Okay. In fact, before we move on, let me just bring up the next, this whole sort of discussion that we're going to have now. So this is what I'm talking about, is how do we know when to use time-based or when to use rotation-based? Okay, and the simple answer is there is no right or wrong. It all just depends on the strategy. Okay, remember what I said to you right at the beginning. You don't want to utilize the tool to make decisions. You ultimately want to have a strategy in mind, whether it's a breakout, a fade, an extreme high, an extreme low, and you want to utilize the tool to extract the information that will allow you to execute the strategy effectively. Okay, so for me, I use both. And as you'll see when we go through the 10 strategies, you're going to see me use that. You're going to see me interchange between the two and give you understanding as to why one is better for that strategy than the other. Okay, but what it comes down to in simple terms is Some of the examples, if I'm looking at daily positioning, okay, so like I showed you that oil, I want to see, where the real pocket positioning is, what the delta is looking like on the day-to-day. What I'm then going to do is I'd far rather use a time-based, okay, so like I showed you, I'd get up a bar and simply make it a time-based. Okay, if I'm a swing trader, maybe I might have a bar, but maybe use 30-minute or 60-minute time-based. Right. When I'm trading things like central banks, so macro events, central banks, economic data events, in this instance, again, I prefer to use a bar, okay? However, this time it's going to be shorter time-based, so it's going to be maybe a 1-minute or a 5-minute bar time frame. Then, in terms of a strategy of breakouts or maybe the cash open of markets, I always prefer to use rotations. Why? Because that's when we tend to see initiative or fast money or flow or, trend in the market. So in those instances, I prefer to use rotations. And then obviously in terms of swing trading, again, if there's good trend in the market and you're a trend follower, rotations will be better. Obviously, if you're maybe a day trader, day swing trading, all right, you might argue that 30 or 60-minute time frame rotations are better. So it all depends, guys. What I want to, and the purpose of this unit, is to show you that you have the functionality of either choosing time-based or choosing rotation-based. Now, the one main advantage and disadvantage of the two, it's very simple, okay? In a time-based, rotation, as you can see, you've got a relative understanding. What do I mean by that? In other words, you know that every one of these bars is equivalent. You're comparing apples to apples. So you can say, in this instance, all the apples were equal. We were really balanced here. The market was struggling to move. We then suddenly had a break. And on this apple, what you would have noticed is maybe there was an increase in volume, increase in volatility relative to the previous bars. Okay, so time allows us to compare things on a relative basis far better than on a rotational basis. Okay, that's the major advantage of time-based. The major disadvantage of time-based, which happens to be the major advantage of rotation-based, is that a lot of the time a time-based doesn't show the auctioning or the trending as well. Okay, in other words, what we can see, if I flick between this and I go and I say modify, and we move this to maybe say a time-based again, okay, what you'll notice is that we can't really see any kind of effective trend here, okay? All we see is maybe a lot of noise. It shows us a lot more information. If I was to zoom this out maybe and put it on a little bit of a longer time frame, okay, again, we can still see, kind of a lot of rotation. But if we go and compare that and we put this back onto a rotational and we simply go and make it a rotation again, we can see that actually there's quite a significant, initiative in this market. There's quite a significant trend early on where the market is really struggling at the moment to retrace in the opposite direction by 10 ticks or more. Okay, so that's the major advantage of time-based and the major advantage of rotation-based. And again, lean on those advantages, but only utilize those advantages when it can add meaningful information to the strategy you're trying to execute. Okay, so hopefully that gives you a little bit of a better understanding. Now, what we're going to move on to is, which are the tools to add to your footprint. Okay, now what I'm going to do is I'm going to forewarn you that don't be sucked into thinking adding a whole bunch of tools is going to make the footprint more valuable. Okay, remember the footprint in a nutshell as a tool is simply showing me the interaction between buyers and sellers. That is the whole purpose of a footprint. It shows me how a buyer and a seller interact with one another. So what you don't want to be caught doing is suddenly adding other tools that are ultimately deviating from the original purpose of the footprint tool. However, that being said, I am going to show you some of the tools you can utilize. Okay, so you're simply going to go and right-click on the footprint, and we're going to add a study onto the footprint. Now, if you click on the drop-down, you'll notice there's all sorts of different types of studies you're going to add. What I would suggest, the ones we're going to focus on will be obviously basic strategies or basic studies, and then obviously the other one will be the market delta studies. Now, the most important that you must add is this FPBS, and the reason is it's a summarized version of the footprint. So it's showing you, it's almost like a summary of exactly what's going on. It's like a snapshot of all the information that is in the rotations. Okay, now what I would say before we move on, let's simplify this. Again, you don't want too much at hand, so simply right click on it, modify it, and you want to then come and look at the display. Okay, so what we want to do is we definitely want to keep volume, we want to keep that there, we want to keep the delta and the delta day, but we don't necessarily want these other things. Okay, if you do want them, don't untick them. For me, the most important three are volume, delta, and the delta on the day. Okay, so now that you've got that information, some of the other studies you can add, I'm going to show you a list of them. These are studies I would have on my tool, and some of the other traders would have. A simple moving average. Okay, again, this doesn't necessarily provide a strategy, but again, it allows us to see when a market is either balancing, i.e. the moving average is quite flat, or when it is trending, i.e. when the moving average is almost sloping quite aggressively to the upside or downside. Right, then obviously the weighted volume average price. Again, something I keep on my footprint just simply to see where the weighted average price is, okay? Reason being, sometimes the market will be hovering in and around the volume weighted average price. In other words, if this was the volume weighted average price, if a market is doing this all day effectively, it's showing us a relatively balanced market, okay? In that case, you don't want to be applying aggressive type strategies. Right. Obviously, sometimes what happens is the market tends to move away from the weighted volume moving average price all day, and you simply see the weighted average price moving down with the market. In that case, this is the kind of market you don't necessarily want to fade, but rather you want to be sticking to trend following strategies. Okay, then obviously we can add the volume profile as I showed you in Unit 2. Again, only if it's going to add value to the tool should you add it. We've obviously added the FPBS. And then the last one, which is quite a nifty little tool, is a nice divergence tool, which I really, really like. Now, to get that up, let's just right click again on the footprint, modify, and go into, right click on the tool, add a study on the footprint, and come onto the market delta studies. Okay, and you'll see it's simply called delta bars. Now, what the delta bars are is it just simply shows us the delta, i.e. this line here in the middle. So it's the net interaction between buyers and sellers in every rotation, but it shows it to us in a different graphic of a bar chart. Now, this is a wonderful tool. Again, it's a lovely divergence tool. You should all know what divergence is. But effectively, what we don't want to be seeing is we don't want to be seeing a market trending, taking out new highs, breaking to the upside, but the delta going negative. Okay? As a general rule of thumb, as we explained in Unit 3, you always want to see the delta moving in the direction of price. In other words, as prices move up and we trend up, we want to see delta go positive. Likewise, as prices go down, we want to see the delta move downwards. Okay, so that's effectively what the delta is. Now, what we can see is, at this current time, we've had quite a lot of positive delta early on the morning, and prices navigated nicely higher. Okay, so again, you can go and utilize this as a divergence tool. When we see higher, or nice positive delta and price moves up, that's good. When we don't see that, when we see price moving up but delta goes negative, we want to put some lines in there. Again, maybe use different colors to illustrate divergences in the delta relative to the price. Okay, so that's some of the tools you can utilize, obviously with the footprint tool. Now, the last thing I want to talk about is back testing. Okay, so a lot of you, once you've done the strategies, you're going to want to go and learn how to, or you're going to want to go and search for these strategies and maybe look at previous days. So it's very simple. Okay, you can. There's two ways you can back test. Most important thing to understand is that to go and look at a previous date, you simply right click on date at the bottom or the time at the bottom, and you go to date. Now you'll see at this current point in time the go to date is grayed out. Now there's a very good reason for that. Okay, you cannot go to a specific date when you have put the setting of the market or of the footprint on a rotational basis. In other words, you can only go back in time and look at a specific day when the footprint is set onto bars. Okay, so you simply right click, come into the market profile, the footprint chart, and click on bar and say OK. Now when you right click on the time and go to date, you'll simply see a date pops up, and we can select any date. We can go to the 4th, we can go any point in time so long as we've got the data. Now, as a point, as a rule of thumb, if you can't get a certain date or you're not getting data at a certain date, I'm just going to take a picture here for you again so you can keep a note of this. But sometimes what happens is you won't be allowed to effectively go back in time, and that's simply because you either don't have the data, okay, so you haven't paid for the data. Remember, your trial will only give you 6 months as standard. Maybe if you do actually take up the software, you do only get 6 months as standard. So if you want to go further back, you do need to pay for that. Or ultimately, if you can't see any data, the continuation settings aren't on at that point in time. In other words, what's happened is you haven't selected continuation settings, and the chart can't show you the information because of that setting. Okay, so to get rid of that setting, you can simply right-click at the top, you can right-click at the top and just click on the continuation settings, and then it should show you data on your chosen time. Okay, now just in terms of the back testing, do note a little trick. Not many people know this, but if you do want to actually still see what the rotation, say now you want to look at a breakout and you want to see what the rotational footprint looked like on that breakout, you can apply this little trick. Okay, so simply go to the date that you want to look at the breakout. So let's say that day occurred somewhere in December. So you click on the day and you say okay, it'll then go to that breakout point. Now note, what you'll see there is the time-based rotations on that breakout day. So simply right-click on it once you have the day and modify it and change the source to a point and figure with your rotation on that day. And you'll see it'll simply stay on that date, but it'll then show you a rotational rather than a time-based rotation. Okay, neat little trick. Not many people know that, so keep that a secret to yourselves. Okay. So that's then the end of the end of the section 3 of Unit 4. Let's now move on to the last section. This is going to be all about advanced footprint application. This is quite fun actually. I quite like this part. And what we're going to talk about here is, highlights for marking your footprint, conditional formats for marking your footprint, as well as obviously adding price alerts to your footprint, and then some of the more nuanced modifications you can make to your footprint tool. Okay, so let's get started straight away with it. The first thing is the highlights. Now, if we right-click on the footprint again and we left-click on the highlights, you'll see this little empty box comes up. Now, all that the highlights are is that it's an effective tool for outlining outliers. Okay, so what do I mean by that? In other words, let's say we wanted to see when there was a really big pickup or a really big imbalance at a certain price. Okay, we can simply left click on the imbalance, shift it across, and what we can tell the tool is that whenever there's a buy imbalance bigger than, say, 500, highlight it for me. Okay, and put a nice nifty color. Now, obviously there might not be any imbalances here when in fact, let's change this so we can get some imbalances so you can see it work nicely. Bar chart, okay. Alright, so straight away you can see some nice purple boxes. So what these purple boxes are showing us is that when, as I've set up, when there is a buy imbalance with quite a big threshold of 500, it'll effectively highlight that imbalance for me and point it out for me. So it's a very effective way of highlighting real big shifts. Okay, and you can play around with this. Obviously, you can create all sorts of highlighters on the left. The trick with this again is you need to know maybe let's say we add volume. Let's say if the volume gets bigger than 1,000, or then we can apply it. Give me maybe a yellow box. Okay, you need to go and determine, obviously with oil, in fact, let's make that a little bit lower. Okay, so again, what that's going to show us is when we have volume that exceeds 500 threshold, it'll highlight it for us in yellow. So you can go play with those highlights. Again, go and see if some of them can add value to your trading. For me, I would definitely focus on volume delta, and the imbalances. Okay, now do note, remember guys, you can see lots of yellow boxes here now, as it's showing me wherever there's volume higher than 500. We can see purple boxes. So the moment we start highlighting certain things, we're adding more noise. All right, so what I would say with the highlights, add outliers. So in other words, What would be an outlier, for instance, in oil, is if we see 1,000 lots trade at one price in a 5-minute time-based rotation. That's quite significant. Okay, it's telling us there's quite a big shift in the volume, and in that instance, I think having a yellow box is worthy. Okay. Now the next one is obviously the conditions. So let's right-click again and let's click on the conditions. Now, this is a wonderful tool as well. This is more, think of this more as like as a signal tool. All right, so a signal occurs from the market and it highlights it for you. Now, I'm going to show you two different signals that I utilize. And the first one is the inside bars. So you can click here on the left again, you can add it to the box. And what we're going to do now is we're going to create some sort of an arrow. So this is going to show us when we have an inside bar. Okay, and we can make the size nice and big so it stands out. So what we're looking for now is potential inside bar. So you can see right in the middle of the screen the market. I'm just going to close this. Okay, so we can see it's showing us that this rotation is an inside bar of the previous, and it creates a nice purple line. Okay, so it's a nice way to create certain types of conditional signals. Now, some of the other signals I'll use will be obviously inside bars, potentially outside bars are really effective as well. That's like an engulfing bar. We also then have potential daily high and low, i.e. when we break daily highs and lows. So you can go through each one of these. What I would suggest, again, don't focus too much on this. This is just something you can utilize later on once you are up and running and effectively executing strategies. Okay, if you do want more information, obviously note it does explain the condition for you in the bottom, so you can effectively get a better interpretation of what every one of these conditions does. Okay. Now the last, or the second to last, sort of signal we can utilize, again, if we right click, we can go and add certain price alerts. Now, this is fantastic for breakouts. Sometimes maybe you're a little bit distracted or you're trading multiple markets and you don't want to miss out on something. So what we can simply do is we can click on the box and we can go and create a new signal for the CLE, which is oil. And we can go and say, if oil gets above price point 58, what I want you to do is effectively make a nice beep for me. Okay, so you'll see if the price of oil gets above the price of 58, it's going to effectively make a price alert for me. It's going to make a noise. Now, if you double click on it, you can go and choose the sound you want. Those sounds, obviously, you can make a selection there. You can select how long it must keep going for. You can choose your own sounds, maybe play a cool song or something. Whatever it might be, guys, those options are there for you. Okay. Now, where we're going to finish off this unit 4 is we're going to talk a little bit about modifying your footprint in order to get more meaningful information. So we're going to right click on the tool again and we're going to come to modify footprint. Now, you've heard me talk a lot about imbalances, and that's kind of what we're going to spend the rest of the section talking about. Okay, so the first thing to do is to obviously get an imbalance, obviously under the style, and we're going to select here imbalance. Now, again, I spoke very briefly about what an imbalance is, and I'm going to go through it again in detail. Okay, so an imbalance is nothing more than a footprint where whenever there is a significant difference between the diagonal, okay, it's no longer horizontal, it's now diagonal. So in an up move, whenever there's a really big difference between what the buyer bought versus what the seller sold, it creates an imbalance. Okay, and we can see these imbalances highlighted in the red on the left and the green numbers on the right. Now, what does it mean? Well, it's simple. An imbalance simply means, as I explained to you in Unit 3, it's where there is quite a significant shift in the interaction between the buyer and seller, because we're shifting from prices. As we move up, prices are shifting and the interaction is shifting. So we can now set, with the footprint tool, we can set what that shift should look like, okay? And that's what we're going to do now. We're going to go and play around with all these options on your imbalance. Now, the first thing to talk about is this button here called the threshold, okay? So what a threshold is it's a way to eliminate a lot of the smaller traded volume or imbalances. In other words, if I don't want to see, low volume imbalances, i.e. imbalances created maybe by algorithms, I can set the market to only show me when there is volume above 50 lots. So as minute I push apply, you'll see effectively we almost lose all of our information. So let's try and maybe make that 5 instead. And we can see that there's a lot of zeros now. Okay, now in other words, obviously where there are zeros, the volume was lower than the 5. Okay, so what I would suggest, again, stick to the threshold of 0, but that's what the tool effectively does. It ultimately just reduces the amount of information you can see. Now in terms of the imbalance, this is the percentage of imbalance in order to show either red on the sell side or green on the buy side. In other words, if I make it simpler, I'm going to make it 400%, which means 4 times as much volume. Okay, what happens is, in this example, we can see that there was 4 times more volume bought than sold. Okay, so obviously 19 times 4 is 76. So we can see that there was 4 times as much, or more than 4 times, and therefore it's created an imbalance. Okay, likewise, to the sell side, we can see obviously there was 88 sold versus 10 bought. That's roughly 8 times. Therefore, because it's more than 400%, it creates an imbalance. Okay, again, we can see obviously it's done the same thing in this instance. Okay, now again, just to point out that imbalance, I would suggest as a rule of thumb, keep that imbalance between, I would say, maybe 200%. Don't go less than 200%, but equally don't go more than 500%. Otherwise, you're going to either have too many imbalances or too few imbalances. Okay, then the last one is obviously this minimum difference. All this is showing, and again, this is why I prefer to keep the threshold 0. If you do want to eliminate some of the noise or some of the imbalances created by algorithms, this is where you can select a minimum difference between the diagonal prices. In other words, if I select, say, 50, what it's going to do is that whenever there is a less than 50 contract difference between the two, it's not going to show me the imbalance. So if I went and I made, let's say, an imbalance of 80, or sorry, a difference of 80, you'll notice as soon as I apply, that imbalance disappears. Why? Because the difference between 10 and 88 is 78, which means the minimum difference threshold is not met. Okay, so again, that's a way to eliminate some of the imbalances created by small orders. Okay, remember, the most important thing to understand about an imbalance, as we spoke about, imbalances are where there is a shift in initiative. Okay, now, ideally, we want that initiative to come from larger time frame participants. Therefore, small order imbalances are not as relevant as large order imbalances. Okay. Now, what we're going to talk about is just in terms of very briefly, you can set thresholds for just the traditional bid and ask style. Note again, this is if you don't want to see too many small orders, you can simply set bid and ask, and again, set some sort of a threshold of 50, and again, it loses all the data because it's too high. Okay, so keep the imbalance to 0. It's probably going to add a little more effect down the line. Okay, now where I want to just move on to is some of the display options. Again, we're going to right click on the footprint, modify, and we're going to start to spend time on this tab called display. Now, again, this is not something I want you to spend too much time thinking about, but to know that the option does exist for you. Okay, so obviously the shades here in the cell setup, well, before that, obviously, we can see we've got different shades of green and red. This is where you can select the shades of green and red. If I push apply there now, you'll see my green changes to a brighter green. In terms of how many shades you want, we did speak about this, but again, this is just simply, remember the shades is an algorithm that is designed to allocate a shade based on the relative difference between the deltas. So if you wanted a lot of relative differences, you can select 14 shades or 16 shades or 18 shades. For me, I would stick to either a minimum of 4 shades. In other words, you will only have 2 blue shades and 2 red shades. Or I would stick to a maximum of 8 shades, where you have 4 red shades and 4 blue shades. Okay, anything more, again, you've got a question, or you may be overcomplicating it. But that option does exist for you. Then obviously sometimes we do want to add a candlestick, just a traditional candlestick bar on the left side of the footprint, so we can see the open, the close, the high and the low. To do that, we simply just select the size of it. We can make it nice and big too, and we'll see obviously that candlestick pops up on the left side. Okay, then the last bit is just some of the options available here to you. Obviously with the width, you can select, how wide these boxes will be. In terms of obviously the redistribute, you'll have, sorry, bear with me for a sec. So in terms of, okay, what we found here is you've got a whole bunch of functions here. You can shade, obviously, some of the reverse shading, just instead of having red for more selling, instead of having a lot of delta in a darker shade, you can flip it around and say when there's a lot of delta, whether it's negative or positive, make it the lighter shade. Okay, so that's all the reverse shading is. In terms of the dominant, again, this is really good function if you want to, if you're a bit more of a flow trader and you only trade directional trend. What this will show you, it'll only show you the footprint shading in terms of the direction that the market's going in. Okay, so again, you can play with those options. For me, what I'd suggest is keep it nice and simple. Okay, if you do update this and you get the latest version of the footprint tool, you'll notice they do have obviously a regroup or a rescale, and the rescale is just simply an auto scale. So when you are moving around, the tool will auto scale with you as you move around, which is quite handy and can come in handy for you. Okay, now before we finish off, that's pretty much a wrap of the tool. It really just shows you the intricacies of the tool, some of the things you can do, some of the conditioning and the formatting. But where I want to kind of finish is with just one more little picture that I'm going to show you, is effectively that. Okay, still not sure. Alright, you've got so many options, guys. As you've seen, you can hover over things, you can hover over any of the functionality, and it'll give you an understanding of what the tool or what that information is. If you're still not sure, you've got the info boxes. Okay, so you can utilize those info boxes as I showed you in the conditional formats. It explains all the conditions. It shows you what it's trying to do. If that fails, you've got the help function. Okay, like I showed you up here in the live chat, as well as the the support. You've got the help function. You can search for certain things so you can better understand them. If that fails, you've obviously got the chat function. Okay, the support of CQG, Market Delta, absolutely brilliant. They're super intelligent. And what really is great, guys, if you're struggling with the software or there's a problem that you're not sure about, they can log on, remotely and help you and assist you and show you how to use the software. Okay, guys, that's a wrap of Unit 4. Make sure you get your setup ready and working. When we move on to Unit 5 now, we are going to start talking about setting up a template, and then we're going to start moving into the strategy. So do spend a bit of time making sure you've got this sorted out so that we can really move into the real fun stuff of developing strategies. Thanks for joining, and I'll see you guys in Unit 5.